Good afternoon, everybody. Going to go over our Forex trades for today, August 27th. Just one trade on a size-adjusted basis, 2.7 pips. Not a whole lot of action. First, we wanted to talk about some economic data that came out. This morning, we had second quarter GDP came out with a huge number, beat estimates, blew estimates away. Matter of fact, beat the highest estimate on Wall Street with a number of 3.7. Headline number looked fantastic until you read into it. That number came on the backs of the largest record-setting inventory build ever. Now, either these companies that are building their inventory know exactly what they're doing, expect consumers to start spending here in the States and in other countries as the whole world is falling apart financially, or they're going to end up going into a huge liquidation sale. And if that happens, that could happen, very well happen in the next quarter, fourth quarter, first quarter next year. If that happens, it could very easily and will lead to deflation, which is the complete opposite of what the Fed wants. They want inflation. Second piece that came out was pending home sales. Missed estimates by a wide margin. Came in at 0.5%. Was supposed to be 1%. The funny thing about it is the head of the National Association of Realtors, he said that plunging stock prices is good for housing market. We all know that's not the fact. We all know from history that's not the fact. It's just pretty comical, and I guess that's why he's in the real estate and not on Wall Street. The last thing I wanted to mention was we had heard rumors that China was dumping treasuries. It got confirmed last night by many sources from Bloomberg to Citigroup that they sold, in the last 2 weeks, they sold $106 billion worth of treasuries. Now, that may not seem like a lot compared to what they have, but considering they sold $143 billion early this year over a 3-month period, at that time it was a record. This $106 billion in 2 weeks is huge. With the stock market getting crushed, you would think we would have seen yields plummeting in on the 10-year Treasury. Flight to quality, right? In fact, it wasn't happening, and this is the reason it wasn't happening, because here they are, they're dumping treasuries. So any of that flight to quality that was buying what they're selling. So interest rates weren't moving much. Now, Citigroup came out with a piece, and they said if they continue to dump, if they sell more of their holdings and the rest of emerging markets catch wind of this and decide to do the same thing because they're having the same type of trouble that China is, and they sell, in all emerging markets in China, sell just 10% of their holdings, it will impact interest rates by over 1% in this country. If that happens, yeah, the Fed may want to raise rates, but not that fast. So it may force the Fed, or I believe it will force the Fed into a QE4, because they're going to have to step in and start buying. It's a really scary situation what's going on in the bond market, but we will see how it all unfolds. Let's get to our trade. We had this one trade, 20% short in Aussie US dollar, 20% of our normal size. Shorted at 0.70918. Closed it at 0.781, picked up 13.7 pips, size adjusted 2.7. It went down about another 8 or 9 or 10 pips from where we covered. It was a decent trade. It was just a real quick trade. So that's it. We're going to wrap it up. If you're still trading now, good luck. If any signals come out, they'll be coming your way, and have a great rest of your day.